we start thinking about what the drivers are. We know that ZS, if I was to look at, for example, the ZC spread, so we can look at ZC, you can see it's almost going to be exactly the same market, isn't it? So you start thinking, Sam, that that could be a possible trade. If I was to trade, for example, short soybeans, long corn, then we've got a bit of a protein spread there, haven't we? Yes? Some of the guys will know when you're looking at any type of spreads, you're looking at different things from a feed perspective, for example. So when you're looking at some of these ideas, you can start to build some of these ideas out, can't you? You can start building out some of these ideas in terms of soybeans, these types of thoughts, the idea of the protein that comes from soybeans for cattle feed, for example, and these types of ideas as you go through these narratives. And one of the things we recognize is soybeans and corn are almost joined at the hip. The other thing we obviously would understand is that this probably has a commodity relationship to the dollar. And we would understand, therefore, it should be positively correlated, one would imagine, to the euro dollar. And sure enough, it seems to be for the most part. And again, we can come out into the 30-minute charts to understand this a little bit better. We can see for the most part, it is positively correlated to the dollar. And we have a couple of changes here, and we can see that those changes fix themselves as far as those correlations. So we've now got a kind of protein spread. We can see that the soybeans at the moment seems to be leading constantly the corn markets higher through this whole phase. The decline in the corn market bullish, the decline in corn here bullish, the decline here bullish. We can also start to see that as the market comes into the US session, it is also very important that we recognize where the market is going into the US session, because you can see the market's rallied at the end of the US session here and then traded bullish into the US Open. The market's rallied in the US session here and it traded bullish into the US Open. The market's rallied again here into the during the US session, dropped back down, but then rallied again into the US session. Rallied into the US session. And the market stayed bullish. So one of the things we can recognize is that the US Open is vital to these markets. We can see that huge, big volume that comes in right there at 1430 on a 30-minute chart. So we already know how to start structuring ideas. We start structuring ideas around the open, don't we? We start saying to ourselves, well, this candle here, that's when I want to make a decision. The 1330, 1400 candle right there, that's where I want to make a decision. So that's you've now got a couple of ideas. The 1330 candle, that's where I want to make a decision. So you're looking for rejections. As soon as you see that rejection, for example, there you say, right, there's my deal. There is my deal. It's my kind of trade. And there's another one. A rejection on the 1400 hours break lower, 1330 into the 14 candle. Another opportunity to buy into this as a trade. Exactly the same every single time, isn't it? Every single day you see it. 1330, a rejection lower, another buy opportunity in beans right there. Another buy opportunity in beans right there. Get rid of the corn for a second. So when you're seeing this, you're starting to build out that picture. You see that changes on this occasion here, doesn't it? Look, changes. The 1330 candle is actually after a rally which came in before the US Open. Maybe getting a little bit too obvious. Rejections, price still wouldn't manage to go up a little bit. Just keeps going. 1330 candle, it never even rejected a lower price. Somebody just bought it on the gap straight away and the market rocketed on that enormous volumes. And obviously we've just came into today's markets. And again, the same storyline. 1330, this time is where? See the difference, Sam? For the first time ever in the last week, a buy trade after a rejection at 1330, a buy trade, rejection 1330, 1330 buy rejection, 1330 buy rejection, 1330 buy rejection, 1330 sell rejection. And all of a sudden you're starting to think to yourself, okay, well that's different. There's a possible sell on soybeans now starting to work back into this top edge. And that's what we've got to start considering. We can start to see some of these elements, can't we? We can start to consider this as a, well, there it is. There's the possible trade. But what else do we do? Well, what else we do is we add the other elements to it. ZL, if I remember correctly. There it is, soybean oil. Oh, I remember these things, guys. Soybean oil is ZL. And we obviously can look at soybean oil, and finally we can look at ZM, which is zoybean meal. And there's the meal futures there, and you can see the spread. You can start to see how the spread is constructed. So you can start to recognize some of the elements that go towards possible trades here. So what is the spread itself? What is the spread itself? Well, we can obviously do different ideas. We can look at, we can do calendars as well, remember, for one thing. So how do you do calendars on soybeans? Well, we just do exactly the same as what we've done before. We look for volumes. We look at old crop, new crops, if that's what people are interested in soybeans. And we come up with some calendars. We come up with some calendars because we're looking at the volumes on the open interest. We're trying to find what kind of calendars we can do. And if you look at soybeans, this is the soybean futures, volume and open interest. And if you look at the volume and open interest, you can scroll down and find where the biggest open interest is. But you can actually go beyond that if you wanted to. But the biggest open interest you can see on soybeans just now is the November contract. So you could do 1 minus November, of course. Yeah? You could do 1 minus November. So we could do 1 minus November, 366,000 contracts. That would give us some ideas about calendar spreads, but obviously, some calendar spreads just don't show much because there is very, very little value divergence. But you're only going to know that by practicing and doing, right? You're not going to know that off the top of your head. You're just going to have to practice these things. So let's take a look. ZS minus ZS, and we're going to November, so that's the X contract 21. I'm doing it in bloody indicators, you fool. Right again, guys, sorry. ZS1 minus ZS. And if you don't know, guys, if you just click on it, you'll be able to go down through and you'll be able to see that the November contract is the X 2021 if you don't know what the codes are for these. And there's the SX21. When we put that on the charts, we can see that this provides us with some sort of calendar spread over that period. And if you look at the background, you'll see that this calendar spread is very useful. You can see, for example, the massive sell-off on soybeans was preceded by the calendar spread selling off massively before it happened. You see how big that trade was? An enormous profitable trade from that massive sell-off on the calendar spread on soybeans. Brilliant, isn't it? Absolutely brilliant. So you can see these are all things that you can think about. These are all things you can use. These are all things you can see. And obviously, the more you see it, the better the trade gets. Now, you can do a 2.2 by 11 trade. You can do all sorts of different things. There's a lot of different ways that you can do different conversions and different processes and all the various different setups. But you can do contract on a 1-by-1 basis. You can try and work out the idea of what the trade is in terms of what the margins are. So if you're looking at something like soybeans, you can, as I said, loads of different calculations. Just the soybean minus meal minus oil and stuff like that. But we'll come back to it because obviously it's a question for classroom, and we can obviously cover some of these aspects in classroom if people have an interest. But certainly it's something that you can build yourself if you've got an interest in it.